Gold has jumped about 22% this year to hit record highs. And there's a look at the 5-year chart, 64%. And this year, the TSX index of gold mining stocks has done even better. It has soared almost 30%. It's been a rapid run-up lately. We're joined for more by Martin Pradier, analyst at Veritas Investment Research. It's great to see you.
Thank you.
So it's interesting, for quite a while, investors were wary of gold stocks, worried about mergers and soaring costs, but they have been going into them lately.
Yeah, I mean, probably the last quarter was the biggest improvement in gold stocks compared to gold.
And is that essentially investors have decided gold mining boards have learned their lesson not to do grandiose projects and takeovers?
I think when gold prices move a lot, then it's easier for gold miners to do work.
Let's look at some of the companies that you favor. Agnico Eagle, you have a buy on it, AEM. What attracts you there? It's one of the world's biggest producers, of course, now.
Well, if you look at the quarter was very, very good. Production was up 2.5%, and costs were down 1%. So I like the companies with low cost, and the cost is not increasing much. So that's really, valuations are reasonable. Risk is low. It's mainly Canada where they have all the mines. So.
Barrick is another company that you like the look of right now, or the stock. But of course, they have a lot of assets in Africa.
Yes, and that is a concern is Mali, because there is some review going on in Mali, and that could be bad news down the road. We don't know, but Barrick has not been performing as well. And part of it is Pueblo Viejo, that the ramp-up has been delayed. And we expect the ramp-up to gain speed in the next 2 quarters. And because this is a big mine and it's a low-cost producer, it'll reduce the cost for overall for Barrick. So I think that there is a little bit of that going on. And that's why we're a little bit more positive on that.
And then Lundin Gold, you like this one. And you say actually in common with Agnico and Barrick, they announce new projects, or they have the potential to build new mines.
Yes, well, the Barrick had a bad quarter, if you want. Production was down 6%. Costs were up 9% for gold and 7% for copper. So it was not really good, but they announced Fourmile. So Fourmile is a big mine. It's 500,000 tons. It's a tier 1. It should be more than 500.
Sorry, this is a Barrick mine.
Yes.
Well, what one is it again, Martin?
Fourmile.
Where is that? In Nevada?
That is in Nevada,
yes,
just beside Gold Rush.
Yes, okay.
And they think that has a potential to become a tier 1 mine, which means more than 500,000 ounces of production per year and more than 10 years of production. It's very preliminary, but the drills that they're getting are very, very interesting.
And what about Agnico? They have potentially a new mine as well down the road?
They have 2 potential new mines. One is the Tour underground. They are already mining in the Tour. It's just underground instead of open pit. And that could be 250,000 ounces of production per year. And then the other one is Beaver Creek, 260,000 ounces of production. So that's also a good mine, and they've done preliminary numbers, and looks like it has an interesting internal rate of return.
And then finally, Lundin Gold. We put up Lundin Mining by mistake there. It should be LUG, of course.
Yes.
Now, they famously seem to have made a go of it in Ecuador with that Fruta del Norte mine, but they could have other projects coming on?
Well, this is probably the one that has biggest impact, because they produce today 500,000 ounces. The new potential mine is 250 to 300,000 ounces, so increases production for them like 50%. And basically is 2 kilometers away from Fruta del Norte. They have very good results on Bonza Sur, and they think that eventually they can do a mine out of that.
Just, we're very tight for time. You like Wheaton Precious Metals, but you have a reduce on Franco Nevada, which is equivalent more or less to a hold at other shops. Why are you less keen on Franco Nevada right now, Martin?
Three things. The first one is structural. They have 30% that is not gold.
Okay. So I'll have to hurry you here, Martin. Go on.
So 30% is not gold. So is oil and gas and iron ore. That when gold goes up, it doesn't. Cannot transform a gold equivalent ounces. The second thing, Candelaria and Antapaccay had a weak quarter. The third thing is global minimum taxes. So they're being hit a little bit by that as well.
Thank you. I'm sorry to rush you there at the end. Martin, it's always great hearing from you.
Thank you.